right, good morning. It is now 6 o'clock Pacific Standard Time, 9 o'clock Eastern. Welcome to StockMarketFunding.com. We are going to start there's 2 days left to the options expiration, but let's talk a little bit about this Dow chart. The Walmart earnings were not that great. They were in line, but here's the problem that we have, is that since we've tried to put in what we call the reversal relief rally that we called here on the Dow, and same thing with the rest of the indexes. If you want to see the rest of the indexes, you're welcome to call and join the online trading community at StockMarketFunding.com. We're giving you free information. Well, for the biggest part, because we care about you. The thing about this is that the weekly chart, the sentiment today, the jobless claims, the PPI, a little bit of inflation, that was hotter than anyone thought. And basically, there isn't any job creation like Obama said. And so basically, the futures are reflecting that data. And what we're going to be doing is taking a look at where we can hold on the Dow. There are two Dow components today. One being Walmart, which is going to have a drag. But people are starting to doubt, well, maybe this recovery isn't as strong as it should be. Well, we already know that. We've already told people that, what it's coming to. And the thing about it is that the NASDAQ futures are gapping down 5.8 when they were in positive territory. Okay? And once again, we had a great earnings on Priceline and Hewlett-Packard, which is a bellwether tech stock, basically. And so the buyers have not stepped up in the Dow. This is all light volume. This is an attempted bottom here. And what I'm going to say is today on the Dow is that the economic picture and the data that's coming in, as I've always said, will catch up. And the reason why we have the soft move down, and it's going to be very volatile, is that this was the relief trend. But let me tell you where the resistance is on the Dow. It's going to be right there, half of that big down selling bar. And basically, the 10-week moving average is tilted down. Yes, they try to get it back above there, but we're going to watch and see where we level up on the Dow. Can the Dow hold 10,150? 10,193? Same thing with the S&P 500. They tried to use the little gimmick in the financials. This is the bottom. This is this week's bar. That was the previous 2 weeks of trying to put a low in. 10-week moving average is that resistance on the S&P 500. NASDAQ comp is the same similar problem. These gaps, and NASDAQ comp has fared better, and so has the NASDAQ 100 than the Dow and the S&P. No doubt about it. And basically, with some of the good earnings coming out, we're going to see where we fail in this move, meaning that this was the counter trend that we talked about 2 weeks ago. Go to our online trading there, click on that, join it. You can see the tapes there. So half of this down bar is where that upper resistance is going to be. And the futures are starting out weak. Apple's gapping down. Google's gapping down. Some of the Amazon's gapping down a little bit. And it is an options volatility expiration. And the sentiment and the psychology or the belief that the economy is getting better as everyone is preaching it, it sure isn't showing up in the bull behavior, because we would have much higher volume off of the bottom here on all of it, on all of these indexes. And that's the way it is. And I'm not seeing the upside volume. And today we're going to see how we kind of fade back, see if we can hold the base here. Remember, a relief trend to a bear reversal is exactly what it is. So now that we've had a couple of weeks off there was the bottom, they followed, a small follow through. Look, there's 2 days left in the week, Thursday and Friday. So this weekly bar isn't concluded. Stay tuned. You can always call us later on, 702-685-00 or 0772.